Beyond owning physical gold and silver, A as liquidity and B as insurance, people need to consider owning the gold and silver mining stocks. It's very difficult for me to understand why people wouldn't do this. I'm not suggesting that people put 100% of their net worth in penny silver stocks. That's not what I'm saying. Your listeners will be shocked.
Hey, lovely people. Gold smashing records, and we've got Rick Rule on board to chat about it. He's all about that long-term vision, advising us not to sweat the small market moves. Plus, Rick's got some smart advice on staying liquid. Could score us some killer deals if the market takes a nosedive. So don't go anywhere, watch till the end.
I think now that it's inevitable that precious metals will do well. I say it's inevitable for reasons that you and I have discussed ad nauseum over the last 3 years. Precious metals do well when people are concerned about the purchasing power of their savings denominated in fiat. And anybody who isn't concerned about the maintenance of their purchasing power is both illiterate and innumerate. We've talked about the subdivisions of concern before. Quantitative easing, which is really counterfeiting. Debt and deficits, negative real interest rates, inflation. There are some people who are less concerned about inflation because they follow the CPI, the Consumer Price Index. And I want to disabuse them of that right now. The CPI is not a measure of the depreciation of the purchasing power of your savings. It's a constructed index, constructed by the big thinkers, hedonistically adjusted, which means they decide what an apartment is worth or what a computer's worth. They don't let the market decide. Too inconvenient for them. It doesn't, when it's inconvenient, include food or fuel. Then again, I like to eat. I like to drive. But most importantly, it doesn't include tax. Anybody who shops where I shop and buys the basket of goods and services that I consume will understand that tax is the largest household expense of working American families. And a cost of living that doesn't include government isn't a cost of living. I would submit to your viewers, before I answer the rest of the question, that the basket of goods and services that they consume, including government, willingly or unwillingly, means that their purchasing power is declining at 7% compounded. The anti-gold, if you will, is the U.S. 10-year Treasury, a fiat-denominated savings instrument. So here's the arithmetic. Your government, the U.S. government, promises to pay you, I think it's 4.26%, and they will, every year for 10 years, in a currency where the purchasing power is declining by 7% and probably increasing. In other words, the government absolutely positively guarantees that they'll cost you, 276 basis points, 2.75% of your purchasing power every year for 10 years. The first promise our government has made me that I unequivocally believe that they will deliver. So, with that long introduction, it staggers me that people aren't more willing or more eager to invest in gold or silver. Previous gold bull markets have shown that a relatively small amount of insurance by way of gold or silver can generate large coverage, protecting your portfolio. In the decade of the 70s, the last time that we faced the recipe, the sort of menu of problems that we face today, the gold price went from an admittedly price-controlled $35 all the way to $850. A little bit of gold sheltered a lot of damage to the rest of your portfolio, probably more meaningfully. The last real gold bull market we had, 2000 to 2011, the gold price went from $256, I think, to $1,850. Pretty good move, sevenfold move, maybe more. The point of this is that people who don't have somewhere between 5 and 10% of their portfolio in precious metals are going into a circumstance with absolutely no portfolio insurance, with the need for real portfolio insurance. Beyond owning physical gold and silver, A as liquidity and B as insurance, people need to consider owning the gold and silver mining stocks. I'm going to argue that most people should own 3 or 4 of the great big ones, which is to say buy market beta. Because when the gold stock market moves, the biggest and best companies in the universe can give you 300 or 400% gains with very, very, very little company risk. For people who are dealing to do more work and take more risk, absolutely, positively, buy the juniors, a well-constructed group of juniors. I joke, Dunnigan, because all of the money now I invest prudently, I made by speculating wildly. I'm not saying don't speculate. I'm saying invest first. Own the beta before you seek the alpha. I think it's very important to do that. I have now been through 2 major bull markets in gold and 3 small bull markets in gold. And in, as I say, the reference market that I have for the bullion, which is the decade of the 2000s, the gold price increased, as I say, from $253, $255 to $1,850 an ounce. A little bit of portfolio insurance salvaged your purchasing power from what could happen in other sectors, and it did it very well. It's very difficult for me to understand why people wouldn't do this. I'm not suggesting that people put 100% of their net worth in penny silver stocks. That's not what I'm saying. Your listeners will be shocked to learn that the market share of precious metals and precious metal securities in the U.S. market is less than 0.5%, which is to say less than 0.5% of all savings and investment assets in the United States are precious metals related. The 4-decade mean market share of precious metals is 2%. I believe that at a minimum, precious metals will regain their 4-decade mean market share, which means that demand for precious metals related investments, gold, silver, gold stocks, silver stocks, that type of thing, demand for those will quadruple. That's precisely what I think is going to happen. And if you look at the moves in the XAU, if you look at the moves in gold price over time, what you'll see is that when they occur, and they're rare, they are absolutely dramatic. The idea that somebody wouldn't want to put themselves in the way of this move is incomprehensible to me. I don't own gold because I think it might move from $2,042 to $2,150 or $2,200. I don't care at all about technical breakouts, $3 or $4 above the trailing average. I own gold and silver because I'm afraid of the deterioration of the purchasing power of my savings in US dollars. I'm afraid that the gold price is going to go to $6,000 or $7,000 or $8,000. Am I saying that's going to happen? No. But I am saying twice before in my life, gold has generated really, truly substantial gains that offset losses that might otherwise occur in people's portfolio. And the ignorance of that history is incomprehensible to me.
Thank you for tuning in. We've explored the exciting dynamics propelling gold to unprecedented heights and the insights shared by Rick Rule on navigating this potential multi-year bull market. Remember, maintaining a long-term perspective and having liquidity in volatile times are key strategies. Don't forget to like, share, and subscribe for more expert discussions and market insights. Until next time, stay informed, stay prepared, and happy investing.